This happens many winters, as Andrew and I were talking about earlier in the show. But, what do you think is unique about this year's disruptions and how it will play out in the market?
Well, the role of natural gas. So natural gas has really become a global commodity now, and it's been that way over the last couple winters. But what you're seeing, especially in the Northeast, is the fact that you don't have enough infrastructure to get natural gas to the Northeast. So there's concern because of the winter storm of power outages. And that's exactly what you don't need at this point in time. But that's a function of not having enough energy infrastructure and having the ability to take natural gas and transport it from really Pennsylvania to New York and New England and other areas.
So a lot of those companies have been lobbying the Biden administration to waive the Jones Act so that they would have more vessels that would be able to transport some of that natural gas and some of those refined products up to the Northeast and some of those areas you were just mentioning. Do you think that would actually move the needle?
Okay, well, that'd have a huge impact if you think about it, because what the Jones Act does is it actually prohibits U.S. produced liquefied natural gas from being imported into New England. So what's the alternative? Well, historically, it's been Russian imported LNG or other LNG from Trinidad and Tobago. But if you remove the restrictions of the Jones Act, then you can simply take U.S. LNG that comes from the Gulf Coast and move it up the coast and then have it delivered into New England. And that's really important.
Why couldn't you just ship that by truck or train or pipeline? Why does it have to be by ship in this case?
Well, so first of all, the most efficient way to transport natural gas is through pipelines. You really can't do it through truck, or you can't really do it through train because of the nature of it being a gas. And you try to liquefy it and use a truck or train. And then from a pipeline perspective, yeah, that's the best answer. The challenge is there's just not enough pipelines going to the Northeast because there hasn't been enough development because of the regulations that are in place that have really prohibited pipeline expansion in the New England area.
Rob, you're a portfolio manager, so your bread and butter is trying to figure out where the market is going to go. But I think if we learned anything in 2022, it's that it is impossible to predict. I mean, just look at December. There was an expectation that the first week of December was going to bring, these big issues like, the price cap going into place, the reserve releases ending in December, and, the European oil embargo on Russian oil going into place. And yet what we've seen is prices actually dropping. So how hard is it to actually think about where energy is going in 2023?
Yeah, that's a good question, Kayla. Day to day, it's obviously there are ups and downs like every sector. Oil, what you're referring to specifically is oil, and the thought that oil prices would go up going into December for all the reasons you just articulated. The thing that changed everything was the fact that the China lockdowns continued, the COVID outbreaks expanded, and so the demand from really the largest consumer of oil, or actually the second largest consumer of oil in the world, started to decline, and the duration of that, I guess, became a concern for the market, which just meant that oil prices went down because demand for oil was expected to be lower into the next year. Now that's kind of changed. That narrative is changing a bit here with what you've been reporting about what's going on in China.
Does the China situation give you clarity, with January 8th marking the end of the inbound quarantine, despite the fact that there are reported hundreds of millions of people who have been infected with COVID in the month of December there?
Yeah, well, what we do know is China oil demand, for the most part, grows every year. Now, it didn't grow in 2022. It was actually negative growth, which is the first time as long as I can remember, and I've been doing this for a couple decades as far as focusing on the energy sector. So we do know that China oil demand growth will return, and will probably return and it'll be very strong. But we also know from our experience here in the U.S., it's probably going to get worse in China in terms of the infections before it gets better, right? And so I think that's kind of the lull we're in right now. And I think that's why a lot of people expect oil prices to rise, including ourselves at Tortoise, expect oil prices to rise in 2023, really driven by the increased demand from China that will come back eventually. It's just a matter of when.